Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the euro currency. So despite that we already yesterday have discussed the performance of other currencies, which is because euro was standing flat and not a lot of moments for discussion. Today, once again, as you can see that here's some important moment has happened. So you can see this market stands in the downside breakout of the flag consolidation. But it's still, the activity is not very strong. So actually, as you could see recently on the release of the CPI numbers, we've got the volatility, but we have no directional performance except maybe the stock market. So headlines tells that this is more or less positive report. It's just because inflation has risen not as strong as it was suggested for a few decimals. But in fact, I suppose that this is, well, not maybe terrible, but report that should make investors be nervous. On numbers, yes, it seems that we will get approximately the same inflation. But if you will take a look in the details, and you will see in what spheres the inflation starts spreading, so you can see this is like the poison starts to moving in all spheres of United States life, so in economy. You could see inflation in services, in absolutely in different spheres. So I'm not even talking about fuel. So it's this different topic. But the inflationary processes, maybe they have not become stronger, but they have become wider. And this is also a warning sign. Because monetary inflation that we see that is Fed actually trying to control, yes, now stands at high level, but more or less stable. But the structural inflation that's just starting, spreading and rising definitely shows the signs of the progression. So another moment that I would like to show you is take a look on the performance of the S&P index. So this is stock market, and currently this process that we have just discussed in recent weekly report is taking place in the market. So Fed triggers the collapse on the stock market because they need to return back demand for the bonds. Now let's take a look what's going on in the bonds. Here is 10-year yield, bingo. You can see yield starts dropping. Investors moving money into the 10-year bond. Not only in 10-year, of course, but this is chart of the 10-year. This is what like Fed to do. So this process will stand for some time. Also be prepared for jumping in a unemployment rate very soon, just because those who using the massive stimulus, pandemic stimulus that have been provided to the households, and all of them put them in the stock market and sitting on the welfare, making no claims for a job, searching. Now they start scream, let me out on the stock market. And very soon you could see that all these people, it's approximately 10 million people, return back to the searching of the job. And unemployment rate should start jump from the 3.6 that we have currently approximately to the 10%. It should happen very fast, very soon. So that's, of course, supports some demand for United States dollar. As you can see here as well, we see that's pressure, some resistance is growing, so it's not really easy for dollars moving higher. But at the same time, generally showing the bullish performance, and that's why in the current situation on the euro currency, we maybe should not consider by far deeper standing target, but the same that we talked about previously, and that we are watching for is 104.30, probably should be completed in the nearest time. On the 4-time frame chart, we could see the clear signs of the bearish dynamic pressure, and actually here as well, just because you can see bullish trend, but price action is definitely not bullish. So it suggests taking out of these lows in nearest time. So pennant has been broken lower, and you can see grabbers have not been reached target yet, so market should drop below these lows. And also be prepared that market could show some acceleration below the lows once the stops have been triggered. That stands right below this area. On the hourly chart, we have the same butterfly. Here's action is a bit slow, but it's some kind of the rounding downside action. So it's a bit slow, but the direction definitely stands to the downside. So currently, guys, it's mostly the same thing that we discussed recently. Our suggestion stands the same. So if you have bearish positions, you probably could hold them. For taking any long position, if you would like to, we suggest that it would be better to wait until this level. So once again, the table that I have shown you recently, I will show you again on euro currency, just to give you the numbers of the oversold today. It stands 103.42. Tomorrow it will be 20 pips lower. So you can see that oversold makes no barriers for the market to complete the target. This week oversold on the weekly chart is also 104.60, which is acceptable, and market also could complete the target that we have. So let's keep watching what will happen, but just it seems that euro should complete the target that we are watching for.